Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we're still sort of trading on the legacy of this FOMC meeting that we had last week and also the Bank of Japan. Both banks, well, pretty much disappointed the markets actually. The Fed sort of didn't hike interest rates. That was fairly much factored in, but also the Fed pulled back quite significantly its pace of potential tightening. So the markets took that as a fairly sort of disappointing move. The dollar was sold off on the back of it. Markets are still fairly choppy on the back of that, but still there's a sort of a marginal sort of dollar weakness that is running through the markets. But the main sort of winner out of both meetings was the yen, which pulled quite strongly higher and pulling dollar yen lower. Now, what we've also seen moving into this week is the markets sort of now playing out this oil price move, that the volatility that we're going to see through the oil price in the coming days with the Algeria meeting between non-OPEC and OPEC countries. Basically, as you can see, the main producers in global output of oil is between the US, Russia and Saudi Arabia. Now, obviously 2 out of those 3 are at this meeting. The US doesn't get involved in stuff like this. So it'll be interesting to see what the market actually takes away from this meeting this week. Will we get any sort of production freeze? Will we get a production cut even? Again, this sort of this meeting's been happened before in Doha in April, I think it was, and this the market was disappointed then, and it'll be interesting to see if they get anything more out of this meeting, because we still get sort of mixed signals out of the various countries that are involved so far. And today we see the presidential campaign really kicking off, really sort of cranking up a notch with the debates that are going to happen between Trump and Clinton this evening after the markets have closed. And it'll be interesting to see what that impact has on the risk appetite, mainly because Trump is obviously very protectionist, and it'll be interesting to see what impact that has on the US dollar, on US stock markets, and possible flight to safety if he performs very well and Clinton performs quite badly. So it'll be very sort of much of a focus, I think, in the markets in the coming weeks in the run-up to the election now. So that is tonight, and we've got a very quiet week in terms of economic data. You've got a little bit of inflation data towards the end of the week, but generally speaking, we're sort of fairly quiet on this week, which is the last week of September. So moving into the Forex markets, what are we looking out for? Well, we've got the euro, which has gained marginally off that FOMC meeting. We're still sort of in these converging trend lines on the euro. Nothing too significant in terms of direction yet, but the euro is still holding up above 111 figure and moving sort of out towards the resistance levels. It's got some sort of key overhead resistance that's beginning to come in between sort of 1250, 13 big figure area, and it'll be interesting to see if euro can sustain any sort of upside momentum, because it's beginning to hit into some resistance once more. In terms of cable, it is continuing to fall away. It's been falling for the last 3 weeks. It's now pulling back towards the lows of the trading range. The lows of the trading range around 28 big figure are big on cable. These are sort of multi-year lows that it's going to be testing potentially. Don't exactly know yet whether it's going to break down. The technicals are still fairly range bound, but it depends on a lot of factors really. I think the weaker dollar, or the fact that the US hasn't hiked interest rates, works in cable's favour, I think, in the medium to longer term still. And I think ultimately that could be the deciding factor that holds cable higher. But dollar yen is falling away. The sort of yen continues to strengthen towards 100 yen figure, and this is a key level. If yen breaks 100, then it could be quite quickly back towards sort of 95 area. 96.50 is a support area, and we could well see that tested at some stage coming soon if that 100 yen level is broken. Another interesting top pattern that I can see on the chart is on the New Zealand dollar versus the US dollar. There's a key level at 72 big figure area, and if that gets broken to the downside, we could see sort of 250, maybe even 285 ticks to the downside. So that you could see some movement on that Kiwi dollar. Now, on the equity markets, well, we've seen more of a range-bound situation developing over the last few weeks as markets have been sort of moving into that key Fed meeting that didn't really give you a great deal. There's not really a huge amount of direction. We're still seeing the fact that the markets are not really getting too much direction because there's no earnings season, and also we've got the prospect of the election coming up soon. So the markets are really pretty much range bound. You've got FTSE sort of trading above 6,612, but it's failing. It's not really getting too much higher. Failing at key resistance level 6,950 area. And you've also got the S&P 500, which is supported at 2,120, but again, can't break out above the new all-time highs, which is at 2,193. So we are seeing some consolidation in these markets, and they need some direction. Otherwise, you might start to see a bit of profit taking. So what about the commodity prices? Well, again, we're seeing gold, which is trading sideways. You're seeing a lack of direction. You've seen the stronger dollar, which has sort of kept a cap on the gains. But now that the Fed has not hiked rates again, maybe we could see a bit of dollar weakness. Could that be the impetus that gold needs for an upside break? Oil is a whole different animal. It's been sort of moving around on the OPEC, non-OPEC oil production limits argument, and that should see some sort of resolution out of that this week. If it's to the negative, we could see a bit of a sell-off. You could see certainly the WTI price testing 43, which is a key support level. Around 45, just above that on Brent crude is the price there to watch. So some interesting levels that we've got on the oil price. Now for the rest of this week, as I said, we've not got a huge amount of data coming through this week. We've got a little bit of housing data and new home sales expected to come off slightly because we had a very strong number last month. We've got durable goods orders for the States as well. Again, not a great number expected to come out of that, minus 0.4. But really towards the end of the week, we get a little bit more of an idea on inflation. We've got not only Japan, we've also got the Eurozone flash data and also the core PCE, which is the number that the Fed will be looking out for. Core PCE expected to tick higher slightly, as is the Eurozone flash data. So it will be interesting if that sort of starts to generate a little bit more of an interest in these currencies, which are a little bit sort of quiet still, following on from that BOJ and FOMC decisions. So a little bit of inflation towards the end of the week could drive some volatility, but markets will certainly be trading off the presidential debate tonight and into tomorrow. So I wish you good luck in your trading, and I will see you next time. Thank you.